Hello and welcome to another update video about Dogecoin. From an Elliott wave point of view, we are still sort of here looking at two possibilities, but obviously the bullish one, the bullish breakout pattern, has not worked out. Where we looked at the blue count here before, wave 1, wave 2, wave 3, and then we said to really put in, let's say, or to give us more confidence that this, let's say, bear market or downtrend for Doge is over, we need to put from here a fifth wave in. Now, that didn't happen. The 10-cent level was the clear invalidation point for this pattern, and we came therefore down a lot. And that is sort of why also, again, the Elliott waves can be so useful, because they tell you clearly the invalidation points. 10 cent was the invalidation point. After that was triggered, we came down around about 30% to 7 cents. So that is clear signal that when these levels are broken, you know, you can set a stop loss there or whatever. Usually somewhere below that level, quite tight. Always depending on your personal circumstances and your position size as well, to keep risk to the degree that you're comfortable with. But yeah, I mean, as I said in the previous video as well, even though we dropped now, you could still consider this as a, consider this as a bullish wave pattern here for Doge, but it's obviously lost massively in credibility now. Obviously also with the 3 waves, we were skeptical and said, ideally I want to see 5 waves, and only then I'd be more confident in buying a setback, because if you see the 5 waves up, then you usually get the 3 waves down, at least if the pattern works out, and I would have bought then the setback. But now that we've only had 3 waves up, this pattern is not reliable anymore. And in the blue count, we can still consider this again as a bullish breakout pattern, but it would be a so-called diagonal pattern. 1, 2, 3, 4, a very deep wave 4 in a diagonal where you can overlap with wave 1, and the wave 5, maybe into the region 15 to 16 cents would be next. But this is not high probability. It's not reliable at all. Of course it can be traded, but be aware that the confidence in this is very low. Of course we are moving in a channel, and as long as we're holding support in the channel here, in this ascending channel, that pattern could work out. But for me to have a, let's say, a meaningful trend or trade, and to understand, or to, let's say, yeah, and you know, be more confident in this whole wave count and into Doge as a whole, and that it has completed the bear market already, and that the low was already in here in June, I would want to see that 5th wave happen now, and then at least I know we've had 5 waves. I can count that as a diagonal pattern. That would then be a wave 1, and I'd be looking at a wave 2 pullback to buy in, possibly, right? But until I see that 5th wave to the upside occur, things are really, really low probability here. So that is why we also have the red count on the chart. That is at the moment primary expectation, because the impulse move to the upside didn't work out. So we're looking here at the move up, because it was only 3 waves, as a corrective wave, a wave 4. That is what I had here before as well, and said as long as we only have 3 waves, this could very well just be a wave 4 and we come down in an impulse. Now in the move down, now we have wave 1, wave 2, wave 3, wave 4 may be finished, and we could see another 5th wave down. Confirmation that we actually see a 5th wave down would occur below the break of the 7 cent level. Yeah, you will already get sort of let's say an alert earlier, and I think if we get if we take out these 2 swing lows, which occurred here on the 14th of November and the 12th of November, which is around 8 cents, I think already below 8 cents, this is going to come down. Most likely you still have the channel support line, but it is also just a support line that will then most likely be broken if we lose these support levels. But again, a support level is a support level as long as it holds. But the way this pattern looks like, it's a typical wave 4. So this could even be some kind of an Elliott wave triangle, which will then come down. But at the moment I have no sort of trust that this is moving up from here, especially if this is just a consolidation after a strong downtrend. It might as well carry on. That is usually more likely. You can even add a trend line here in some way to this kind of triangle pattern. So a breakout here, especially to the downside, would already be a really good indication it's coming further down. Target maybe around 4 to 5 cents. However, if we now move up and break above the recent swing high at 9.5 cents, then we might already be in the 5th wave, and a wave 4 will get unlikely, yeah, basically above 10, let's say 10.4 cents, because that's the 50% Fibonacci retracement level. So in summary, as long as we stay below 10.5 cents, this could still be a wave 4, and that would be my primary expectation. As soon as we get above 10.5 cents, I think we are in a 5th wave, and put that 5th wave in a possible breakout. So yeah, that's my update about Doge. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.